The Vietnamese Dong remains one of the most closely watched currencies in Asia, as investors, exporters, overseas Vietnamese communities, and currency market participants continue to monitor every development related to Vietnam's rapidly expanding economy. During the second quarter of 2026, discussions about a possible revaluation of the Vietnamese Dong have once again intensified across financial forums, social media platforms, and investment communities. However, official economic data and statements from financial authorities indicate that Vietnam continues to follow a carefully managed exchange rate policy designed to support economic stability, export competitiveness, and sustainable growth. As of today, the Vietnamese Dong is trading near 26,300 VND per US dollar, reflecting a relatively stable performance compared with recent months. Market analysts note that the currency has shown resilience despite ongoing uncertainties in global financial markets. Recent economic reports suggest that Vietnam's export sector remains strong. Foreign direct investment continues to flow in the country, and manufacturing activity remains one of the key drivers supporting economic growth. Speculation regarding a major revaluation of the Vietnamese Dong has circulated for years. Many investors believe that Vietnam's expanding economy, growing foreign reserves, increasing international trade, and rising strategic importance in global supply chains could eventually support a stronger national currency. Nevertheless, economists caution that a significant overnight revaluation remains unlikely, because such a move could disrupt exports, reduce competitiveness, and create instability in financial markets. Vietnam's economic success over the past decade has been remarkable. The country has transformed itself into one of Asia's leading manufacturing and export centers. Global corporations continue to expand operations in Vietnam as companies diversify supply chains and seek alternatives to traditional manufacturing hubs. This trend has generated employment, increased exports, and attracted billions of dollars in foreign investment. The strength of Vietnam's export sector remains one of the most important factors supporting confidence in the Dong. Electronics, textiles, footwear, machinery, agricultural products, and consumer goods continue to contribute significantly to export earnings. Strong export performance helps generate foreign currency inflows, supporting exchange rate stability and strengthening the country's overall economic position. Foreign direct investment has also played a critical role in supporting Vietnam's currency outlook. International companies continue to invest in factories, logistics infrastructure, renewable energy projects, technology parks, and manufacturing facilities throughout the country. These investments create long-term demand for local labor, while contributing to economic growth and productivity improvements. Financial analysts point out that Vietnam's currency management strategies differs from countries that allow completely free-floating exchange rates. The State Bank of Vietnam actively manages the exchange rate through a controlled mechanism designed to limit excessive volatility. This approach allows policymakers to respond to global economic shocks while maintaining confidence in the domestic financial system. Recent reports suggest that pressure on the Vietnamese Dong has eased compared with previous periods when a strong US dollar created challenges for many emerging market currencies. Analysts expect US monetary policy decisions to remain an important factor, influencing exchange rate movements throughout the remainder of 2026. If the US Federal Reserve continues to maintain a stable interest rate environment, pressure on regional currencies could remain manageable. Economic growth projections for Vietnam remain positive. Several international institutions continue to forecast strong GDP expansion supported by manufacturing activity, domestic consumption, infrastructure investment, and export demand. Positive growth expectations contribute to investor confidence and help support long-term stability in the currency market. The banking sector has also shown signs of resilience. Commercial banks continue to expand lending activities while maintaining capital requirements established by regulators. Financial sector stability remains an important pillar, supporting confidence in the Vietnamese economy and the national currency. Another factor frequently discussed by currency observers is Vietnam's foreign exchange reserves. Adequate reserves provide authorities with flexibility to manage exchange rate fluctuations when necessary. Strong reserves can help reduce market volatility during periods of global uncertainty and reinforce confidence among international investors. Despite these positive developments, economists continue to emphasize that a stable currency is often more beneficial than a rapid appreciation. Vietnam's export-oriented economic model relies heavily on maintaining competitive pricing in international markets. A sharp revaluation could increase the cost of Vietnamese goods abroad, potentially affecting export performance and employment in manufacturing industries. Market participants continue to monitor trade relations between Vietnam and major economic partners. The United States remains one of Vietnam's largest export destinations, while China, Japan, South Korea, and European markets also play significant roles in the country's trade network. Changes in global demand, tariffs, and trade policies can influence currency dynamics over time. Inflation remains another important consideration for policymakers. Maintaining price stability is essential for preserving purchasing power and sustaining economic growth. A balanced approach to monetary policy helps authorities manage inflation risks while supporting business activity and investment. Vietnam's tourism sector has also contributed to foreign currency inflows. International visitor arrivals have continued to recover, supporting hotels, airlines, restaurants, transportation providers, and other service industries. Tourism receipts generate additional foreign exchange earnings that can strengthen the country's external position. Technology investment has emerged as another promising area for Vietnam's economy. Digital transformation initiatives, software development, semiconductor projects, and innovation-focused investments are helping diversify economic growth. These developments may enhance productivity and strengthen the country's competitiveness in the years ahead. Currency traders continue to analyze technical indicators and economic data for clues about future exchange rate movements. While short-term fluctuations remain possible, most mainstream financial institutions expect gradual adjustments rather than dramatic currency revaluations. Current forecasts generally suggest continued stability with modest movements influenced by economic fundamentals and global market conditions. Many online discussions continue to promote speculation about extraordinary exchange rate changes that could dramatically increase the value of the Vietnamese dong against the US dollar. However, professional economists generally view such claims with skepticism. Historical experience demonstrates that major currency revaluations are rare and typically occur only under specific economic circumstances, supported by substantial policy changes. The State Bank of Vietnam continues to emphasize macroeconomic stability as a key objective. Policymakers aim to balance economic growth, inflation control, financial stability, and export competitiveness. This balanced approach has contributed to Vietnam's economic progress and has helped the country navigate periods of global uncertainty. Vietnam's infrastructure development programs represent another source of optimism. Investments in transportation networks, ports, airports, industrial zones, and energy systems can improve productivity and support long-term economic expansion. Enhanced infrastructure may increase the country's attractiveness to foreign investors and strengthen economic fundamentals over time. The manufacturing sector remains a cornerstone of economic growth. Production facilities across the country continue to supply goods to global markets, generating export revenue and supporting millions of jobs. Manufacturing strength contributes directly to foreign exchange earnings and helps reinforce confidence in the economy. Looking ahead, analysts expect several factors to influence the Vietnamese dong during the remainder of 2026. These include U.S. monetary policy decisions, global economic growth trends, international trade conditions, commodity prices, foreign investment flows, and domestic economic performance. Each of these variables could affect market sentiment and exchange rate dynamics. Financial experts note that gradual appreciation over time is generally more sustainable than sudden revaluations. Incremental improvements supported by economic growth, productivity gains, and strong external balances are often viewed as healthier for long-term economic development. Such an approach minimizes disruptions while allowing businesses and investors to adapt to changing market conditions. Investors seeking information about the Vietnamese dong are encouraged to rely on official sources, central bank announcements, and reputable financial institutions rather than unverified rumors circulating online. Accurate information remains essential for making informed financial decisions in an increasingly interconnected global economy. Current evidence suggests that Vietnam remains focused on maintaining stability while supporting economic growth. The country's strong manufacturing base, expanding export sector, growing foreign investment, and improving infrastructure continue to provide a foundation for long-term economic progress. While speculation regarding major revaluation events is likely to continue, official data currently points toward a strategy centered on gradual management rather than dramatic currency adjustments. For now, the Vietnamese dong remains supported by a combination of economic growth, export performance, foreign investment, and prudent monetary management. Market participants will continue watching future developments closely, but today's verified financial information indicates stability rather than any confirmed large-scale revaluation event. As global economic conditions evolve throughout 2026, the Vietnamese dong will remain an important currency to watch in the broader Asian financial landscape.